A very good day to my beloved lecturer and my friends. We are from class group B of Financial Accounting and Reporting 3. Today, my friend and I from group 2 of this project will present about the application of MFRS by Malaysian companies. So, my name is Choon Yue, number metric 2700643. I will present about the first segment of this project, which is background of company. In terms of company profile and business activity for 7 selected company, which included number 1. Turbo Merch Berhad is an engineering and trading company branch in Malaysia and incorporated in 2010. Its business activity specializes in rotating equipment of oil, gas, and petrochemical industry. Number 2. Tiger Synergy Berhad is an investment holdings company headquartered in Malaysia and incorporated in 1994. Its business activity involved in property development and construction, as well as wood-based manufacturing and trading. Number 3. Thrive Property Group Berhad is a green technology battery company headquartered in Malaysia and incorporated in 2002. Its business activity specializes in research and development, plan and advertising of battery control system, trading of solar panels, manufacturing, installation, and marketing battery control system. Number 4. Tommy Pie Holdings Berhad is a manufacturing of food packaging material company headquartered in Malaysia and incorporated in 1979. Its business activity involved in manufacturing and selling packaging material, polyethylene films, polypropylene, and sheets. Number 5. Binti Kingdom Corporation Berhad is an engineering and construction company headquartered in Malaysia and incorporated in 1973. Its business activity specializes in design, install, and commission systems for engineering. Number 6. TPC Plus Berhad is a poultry farming company headquartered in Malaysia and incorporated in 1978. Its business activity involved in production, breeding, packaging, selling of tables, eggs, and feed for poultry. And number 7, Tambun Indah Land Berhad is real estate and property development company headquartered in Malaysia and incorporated in 1993. Its business activity involved in development and marketing property and development project. So in overall, the background of company can give us about the comprehensive picture for all 7 company which come from different sectors such as industrial product and services, property, technology, engineering and construction, as well as consumer products and services. So in the end, there is a disclaimer about Tommy Pike Holdings Berhad and TBC Plus Berhad will be replaced in financial ratio analysis due to these 2 companies are service-oriented company which don't have inventory. So that's all from me. Thank you very much.
Hi, Assalamualaikum. I'm Nurwati Amirah Binti Abdul Halim. My metric number is 272586. Today I'm going to present about disclosure of MFRS 110 by Malaysian companies. The first event that were reported is impact of COVID-19 pandemic. As we all know, a huge disaster named COVID-19 affected the business around the world. Both the Merch Berhad and Tambun Indah Land Berhad affected by this pandemic. It led demand of the goods and services to decrease due to MCO. There is no evidence provided that the condition exists at the end of the reporting period. Therefore, this is a non-adjusting event. The second event is redeemable convertible notes RCN raised and converted into ordinary share. For Tiger Synergy Berhad, conversion of RCN into ordinary share is realized after the end of the reporting period. This event disclosed the total of 85 million ordinary share converted with the amount of 8,500 and notes to the financial statement to the financial year 2019. There is no evidence showing that the event had existed at the balance sheet. Therefore, it is considered as non-adjusting event. The third event after reporting period is renounceable right issue of new ordinary share and free detachable warrant. For Tiger Synergy Berhad, the renounceable right issues exercise is realized after the end of the reporting period. This event disclosed the total of 2,269,684,614 new ordinary shares, 3 right share for every 2 existing ordinary share, and 1,702,269,460 free detachable warrant, 3 warrant D for every 4 right shares subscribed for renounceable right issue. There is no evidence showing that the event had existed at the balance sheet date. Therefore, it is considered as a non-adjusting event. The fourth event is private placement of new ordinary share. For Tiger Synergy, the private placement event is realized after the end of the reporting period. This event disclosed issue 1,124,842,307 new ordinary shares for private placement at notes to the financial statement for the financial year 2019. There is no evidence showing that the event existed at the balance sheet date, thus this is a non-adjusting event. The fifth event is a restrictive membership arrangement for proposed membership of new conventional offers. Thrive Property Group Berhad and Avenue Escape Sendirian Berhad went into a restrictive membership arrangement on 12 March 2019 for the proposed membership by drive of 150 new conventional offer in AESB shares. Speaking to 60% value interest in the broadened gave share capital of ASB for a membership thought of 70,356,898 to be fulfilled completely in real money. Proposed subscription. According to MFRS 110, even after reporting period, this subscription agreement has no evidence provided that the condition exists at the end of the reporting period. Thus, it is a non-adjusting event. Last event is dispose of share. For Binti Kingdom Corporation, on 29 May 2019, company disposed of 35,000 share of Bacan Development Sdn Berhad, representing 46.67% equity interest for a total cash consideration of 35,000. There is no evidence showing that the event had existed at the end of the reporting period. Thus, this is a non-adjusting event. For the conclusion, in general, all of the company we choose have event after reporting period stated in their annual report. Within year 2018 2000 to 2019, a total of 6 events of reporting period were reported. All the events are non-adjusting event where it does not affect the statement of financial position. No adjusting entry is required, but it is still shall be disclosed in the notes to the financial statements.
Assalamualaikum doctor. My name is Atira Binti Abdul Rahman, and now I'm going to proceed with my part, which is I'm going to explain about key audit matters of 5 companies. Key audit matters are defined as those matters that in the auditor's professional judgment were of most significance in the audit of the financial statements of the current period. The first one is the Mohd Berhad gets revenue from its 2 types of business activities, which are sales of goods and rendering of services. This activity is either directly or indirectly related to its asset and liability, which are usable in financial statements. Although they are committing with terms to agree and contracts, they still face the risk that revenue could be misstated resulting from cut-off issue. For example, if there is any delay in shipping, which is clarified by monitoring of shipment status, it will directly affect the timeliness of revenue recognition practice. As a consequence, it will lead to material misstatement of revenue in financial statements. Besides that, if there is any delay in monitoring the service report status also might affect the timeliness of revenue recognition. It will bring the revenue to be misstated in financial statement. Next one, assessment of impairment of land held for property development. Key audit matter addressed in Tiger Synergy Berhad for the financial year 2018 was the impairment of land held for property development assessment. The impairment of land held for the property was focused as the assets carrying amount was recorded Rm104 million, representing 42% of total assets in the financial statements ended 30th June 2018. This is because the company's directors required to take significant judgment toward the recoverable amount assessment for its land held for property development in determining the impairment loss of the asset. The third one is assistant and valuation of inventories. Key audit matter addressed in Tiger Synergy Berhad for the financial year 2019 was inventories assistant and valuation. The assistant and valuation inventory will focus as the recognition of land held for property development and properties under development costs were recorded Rm136,595,963 and Rm117,307,932 respectively in the financial statement ended 31st December 2019. This is because the assistant of inventories has material account balance and large number of individual land parcels and all related development expenditure incurred. At the same time, the valuation of inventories was the high dependency of estimates based on current and future market or economic conditions in determining the recoverable amount or net realizable value. The fourth one is transferred expenditure for property development to land held for development. During 2018, Thrive Property Group Berhad transferred its expenditure for property development under Pakar Diri Sendirian Berhad to land held for development increased to Rm44.5 million. Land held for the development of property shall be replaced by the cost of developing the property at the beginning of the improvement movement. It tends to indicate that progress will be finished within the normal range working cycle. The fifth one is impairment of asset for trade and other receivable. For Thrive Property Group Berhad in 2018, impairment of asset does not occur. Impairment is reviewed by the end of the reporting period when there is proof that the asset might be impaired. The impairment is estimated by looking at the carrying amount of the resource with its recoverable sum. Total recoverable assets are higher than the asset's net selling price and are measured by reference to discounted future cash flow. The sixth one is revenue recognition from the sales of solar energy. In 2018 and 2019, Thrive Property Group Berhad's revenue is the fair value of the TOT received for the offer of merchandise and services delivered in the common activities of the group. Revenue from the offer of merchandise and services is perceived when critical dangers and the reward were moved to the client, assuming any or on the services presentations upon return and exchange limit in the current period. Revenue was perceived at Rm4.09 million in 2018 and Rm4.19 million in 2019. That's all from me. Thank you.
Hello, Doctor. I am Asokumar with matrix number 273127. I will be continuing with the key audit matter. The next key audit matter is transfer of non-current assets of long-term leasehold land and building. In 2018, Thrive Property Group Berhad's land held for property improvement involved land with no dynamic advancement exercises is done or where improvement exercises are not expected to be done in the normal working cycle. Non-current assets held to be sold represent the transfer of non-current assets of long-term leasehold land and are valued at 4 million ringgit. The next key audit matter is conduct impairment assessment to assess recoverability of asset. In 2019, the same company, Thrive Property Group Berhad, conducted impairment assessment to assess the recoverability of asset. Loss of impairment is recognized in profit or loss unless the asset is carried at a revaluation where the loss of impairment is recognized directly against the surplus in the revaluation of the asset, so that the impairment loss shall not exceed the revaluation surplus for the same asset. Recognized impairment losses for a cash generating unit are given. First, decreasing the carrying amount of any kind of goodwill allotted to the unit of cash generating. Next key audit matter is revenue recognition for construction contracts. Since Binti Corporation Bukhar is in the engineering and construction sector, in 2018, the company recognized the revenue based on the completion method stage for construction contracts. The contract revenue includes the initial amount agreed in the contract plus any changes in the work of the contract to the degree that they are likely to result in revenue and can be accurately calculated. As soon as the outcome of the construction contract can be measured reliably, in proportion to the stage of completion of the contract, contract revenue and contract costs are recognized in profit and loss. If it is difficult to accurately predict the outcome of a construction contract, contract revenue is recognized only to the degree of contract costs incurred that are likely to be recovered. And expected loss on contract is immediately recognized by profit or loss. The total contract revenue is 216,373,000 ringgit, and the cost of contract is 178,014,000 ringgit. Next key audit matter is the same company, Binti Indian Corporation Bukhar, for the impairment on trade receivables. That company assessed each receivable separately for the determination of impairment on receivables in 2018 as to whether there is objective evidence of impairment at the end of each reporting period. In profit or loss, an impairment loss is respect of our loans and receivables is recognized. It is calculated as the difference between the carrying amount of the asset and the present value of the future estimated cash flows discounted at the original effective interest rate of the asset. With the use of an allowance account, the carrying amount of the asset is reduced. So in the financial statement, they report impairment loss as 59 million 272,000 ringgit. Then valuation of property, plant and equipment. Same company, Binti Indian Corporation Bukhar, uses the independent professional valuers to determine the fair value of leasehold of freehold lands and buildings on every 5-year basis. So in financial statements, leasehold lands and buildings has carried at a fair value amounting to 65 million. Revaluation surplus amounting to 23 million was recognized during the financial year. Next, for the valuation of investment property, uh, same company, Binti Indian Corporation, so same as her previous chaotic matter. Investment properties have carried at fair values amounting to 7.368 million, and the changes in fair values amounting to 1.334 million was recognized during the financial year. Then the final key audit matter is the assessed risk on revenue recognition for property. Ramun Land Indah Berhad gets its revenue from property development activities. In the year 2018, the financial statement stated 170,735,733 ringgit. It requires management to determine the performance obligations in contract with the customers, transaction price and cost, the input method to recognize the revenue. So the all information for key audit matters in 2019 is same as the year 2018, but the total revenue gets from the property development activities in 2019 stated at 109,215,008 ringgit.
Assalamualaikum warahmatullahi wabarakatuh. My name is Siti Nurizatie binti Muhammad Rashidi. My metric number is 2733333. I will present about financial ratio analysis and conclusion. Okay, firstly, I will talk about current ratio. Current ratio for two merged Berhad and Tiger Synergy Berhad has the highest current ratio among the companies. For the lowest current ratio, that is Tommy Park Holding, that has lower ability to meet short-term obligation. For quick ratio, Tuba Merge Berhad record the highest quick ratio among the companies for 2018 and 2019. And then for Tommy Park Holding Berhad record the lowest quick ratio among the companies. Then I will continue with inventory efficiency ratio and inventory days. TPC Plus Berhad shows the highest inventory efficiency ratio for 2018 and 2019. And then for Tiger Synergy Berhad shows the lowest inventory efficiency ratio among the company. That shows the low ability to manage its inventory efficiency. And then for inventory days, TPC Plus Berhad has the shortest inventory days. And then for Tiger Synergy Berhad has the longest inventory days for 2018 and 2019. And then for trade receivable days, TPC Plus Berhad shows the shortest trade receivable among the company for 2018 and 2019. However, for Tambun Indah Land Berhad shows the longest trade receivable days among the companies. And then for trade payable days, Tommy Pak Holding Berhad and Tuba Merge Berhad have the shortest trade payables days among the company for 2018 and 2019 respectively. However, for Tambun Indah Land Berhad has the longest trade payable days among the companies for 2018 and 2019. Next, for sale to working capital ratio, which is TPC Plus Berhad record the highest sales to working capital ratio among the company for 2018 and 2019. However, for Tiger Synergy Berhad record the lowest sales to working capital for 2018 and 2019. That indicates the company has a low efficiency to use working capital in supporting the sales. And then for working capitals, Tambun Indah Land Berhad shows the highest working capital among the company for 2018 and 2019. That indicates that the company has a high liquidity to settle its current liability. However, for TPC Plus Berhad shows the lowest and negative value working capital among this company for 2018 and 2019. They indicates that has a low liquidity to settle its current liability. Lastly, in terms of cash operating cycle, TPC Plus Berhad has the shortest and negative value cash operating cycle among the companies. That indicates that the company have the high efficiency in paying suppliers and receiving cash from sales. However, for Tiger Synergy Berhad has the longest cash operating cycle among the companies for 2018 and 2019, which indicates that the company has a low efficiency in paying suppliers and receiving cash from sales. The conclusion is for key audit matters that have 5 companies that related to revenue recognition, impairment of asset for property, plant and equipment, land held for development, trade receivable and others. For working capital ratio has a 9 ratio, which included for current ratio, quick ratio, inventory efficiency, inventory days, trade receivable days, trade payable days, sales to working capital ratio, and cash operating cycle. Lastly, for disclosure of MFRS 110 has a non-adjusting events that related to COVID-19, redeemable notes, conditional subscription agreement, and disposal of ordinary share. That's all for me. Thank you.